Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a look at the action in today's session, where we saw a pause in the market rally. But as always, we have three names that we want to take a closer look at.
Yeah, we'll take a look at Invesco Solar. That's ticker symbol TAN. A lot of the solar stocks are looking interesting. UnitedHealth, UNH, and also Merck, MRK.
Okay, well, some detailed analysis on those three stocks coming up. But first, let's take a look at the major indexes. The Nasdaq today down at 0.7%, the hardest hit. We also had the S&P 500 down 0.3%. The Dow off by 0.2%, and it looks like the Russell 2000 closed in positive territory by about 0.25% or so. So, Justin, talk to us about what we're seeing here. I mean, we saw a strong move at the end of last week, so a pause here isn't out of the question. It makes somewhat sense here to see a pause.
Yeah, we have had a strong move off the bottom so far, but this is where we start, looking at the scales. We start putting some things on the positive side, we start putting some things on the negative side, and see how it all flushes out. So let's go through some of the things that are positive. Well, it did hold a lot of the gains. It really didn't give up that much ground when you look at it compared to Friday's strong gains. It also remained above the 21-day moving average line. On the downside, we are looking at potentially some problems here. If we get up to 12,000 or the 50-day moving average line and get turned away, so that'll be something to see. Also, if you just kind of look at a downtrend line starting at that 14,646 level, and if you start moving down to the 12,000, to 320, this could be kind of hitting its head on some resistance areas. So that resistance area is something to be watchful and mindful of. We did call a follow-through day on Friday. It's one of those things that a lot of people may find controversial. We put a kind of an asterisk on it because the volume really did come from the Russell rebalance. It wasn't really tracking higher for most of the day. But Bill O'Neill, he usually didn't want to make too many excuses for or against volume based on holidays or Russell rebalances. And he always wanted to look for that reason to get in. But here we go on the other side. We had Joe Fahmy on IBD Live today, and he had a great discussion. And one of the parting words, I guess, was don't fight the Fed. Right. And right now, we do not have a Fed that is really on the side of the market. And so we could be seeing some problems ahead. Another positive, the Russell 2000. That's the small cap kind of outperforming today, having a little bit more strength. That's something that kind of shows, hey, maybe there is an okay comfort with kind of a risk on. That's what a lot of people look at for the Russell 2000 as a gauge of. So we got a lot of positives and negatives kind of weighing and balancing themselves out. So I think this is one of those cases where we have to kind of wait and see how this pans out.
Exactly. Yeah. Taking things one day at a time. And sorry for the slight delay in the charts there. I'm going to pull back up the NASDAQ, Justin, just so people can see a visual to the analysis that you were describing there. So again, with the strong move, especially towards the end of last week's, a little bit of a pause here, holding above the 21-day line. That is, first line in the sand on the downside that would it be too much to ask for the market to hold the 21-day?
Yeah, I mean that's again, we're talking about the first steps, right? You gotta hold the levels that you're taking, and a lot of times when we look at a follow-through day, one of our first lines in the sand is, can you hold above the low of the follow-through day? Because a lot of times when you close below that level, it's kind of a sign that your rally is going to be under trouble. And there's nothing to say that this might be the bottom, but it doesn't mean that we're necessarily going up. So sometimes you can go sideways for quite a while. You can kind of chop around, and that sideways action would actually be kind of good right now because there still is a lot of destruction out there in the charts, and we don't have as many setups as we normally would see with a follow-through day that works. Right. So if we did go sideways here, that wouldn't be a bad thing because it would give those stocks a chance to kind of catch up, finish forming their bases, and potentially have some setups for when a follow-through day does work or when a rally does get a more sustainable uptrend.
Exactly. And you also mentioned a downtrend line. What highs were you connecting from that?
If you simply go to that 14,646 level, right there below the 200-day, that was the last time we hit our head on the 200-day. Then we had that short rally at the end of May that really didn't pick up much steam. It held above 12,000 for a little bit, but now we're right at that level again. So between that and the 50-day moving average line and the 12,000 level, those are all kind of looming as potential resistance levels that I think will be important to watch and see how we handle ourselves.
Yeah, and then if we look at the weekly chart, I mean, we're right at the 10-week line, and
Yes.
that previously was an area where we were saying, hey, let's start looking at short ideas.
Yeah, so that's the other thing, is we talked about flexibility. You have to be ready to go either way, and it's hard to get too heavily invested for me right now, because knowing that you could go either way, I don't want to really put my bets too far on either side. So it's one of those things where I still think it's a little bit of a, you can kind of start dabbling a little bit, nibbling, as Ken Shreve likes to say, but it makes sense to wait to kind of get some more evidence here on which way we're going.
Okay, let's also take a look at the 10-year Treasury yields, your TNX on Market Smith, continuing its bounce after a pullback near the 50-day line. It wasn't as smooth of a pullback as the last one. This one was a little sharper, a little faster, but we are seeing a bounce at that critical level once again.
Yeah, and this will be important to watch, because it's kind of what the market feels is where the 10-year Treasury yield should be, and in some ways it was kind of projecting a little bit ahead of where the Fed has been. Now, notice last week we did have a very strong bounce out the 10-day moving average line on the 21st of June, and that quickly fizzled out. So just because we have a bounce today doesn't mean it's going to hold. So here again, I think we just need to wait a little bit to see, is this kind of a temporary bounce, or is this something that we're going to see another run in the 10-year Treasury yield?
And let's also take a look at XLE, the energy sector ETF, up today by almost 3%. This does have heavy weightings in Chevron and Exxon, but maybe we will see some base building in energy stocks versus them continuing to roll over. Just once again, it's a little early. We got to wait and see. I feel like we're still in wait and see mode with this too.
Yeah, and look, oil and gas was hit hard the last 2 weeks. I mean, there were some really big moves to the downside. Could we be getting support here at the 40-week line in a lot of these? And XLE, as much as there's that strong weighting that you mentioned for both ExxonMobil and Chevron in XLE, it's one of those things where, look at XOP. XOP looks very similar. Again, it got a hard hit, and today it was up 4.5%. So there is something going on here with oil and gas. The last, today and the last couple days of last week, trying to rebound. But look, there's been a lot of damage done, so it's got a ways to go. I mean, it's 20. XOP is off 25% in just a couple weeks. Is what that is what caused that damage. So it's got some recovery to do.
That it does. And let's also take a look at XBI. This is a healthcare sector ETF. It focused on the biotech area, and it dipped a little bit, but we've seen a strong move in this group over the last 2 weeks, an upside reversal 2 weeks ago and a strong move last week, up about 14%.
Yeah, and we've been talking a lot about healthcare stocks, as we talked about on IBD Live today. As I was going through the industry group spreadsheet, the biotech area is where a lot of our screens are now gravitating towards. They're gravitating away from oil and gas, which has been leading this entire year, and gravitating more towards biomed and biotech. So these can be a little bit tough to play. You've got all these things that will come out, especially with the smaller companies, where maybe they don't have as robust of a pipeline. They don't have as many drugs that are out making money for them. So you can have these phase 2, phase 3 trials that can really do some damage, or maybe an FDA approval or disapproval that can make some very wide swings. But XBI is a way to kind of smooth some of that out, get exposure to the group. Now, this this looks like bottom fishing, right? And that's not something that we do with individual stocks, but sometimes we can do that with ETFs, mostly market index ETFs, not necessarily sectors. But we did note on this one that this is XPI has gotten support at a level where it got support back in 2020, a level where it got support back in 2018. So it might be its turn. And with these ETFs, when you've got more stocks in there, a lot of times we do look for some mean reversion. So this is what usually happens, where once it gets either too far above or too far below its average, you'll kind of see a little bit of a snapback. So that's something to look forward to, and be on the lookout for XBI.
Yes, and this is a great segue to our next topic, which is the Invesco Solar ETF TAN, because we've been talking more and more, Justin, about solar stocks, whether it's Enphase, Solar Edge, Daco, you name it. We're really starting to talk about them more and more, but those things are pretty dang volatile. So
Yeah.
going with an ETF can help you take advantage of a trending group without that single stock risk.
Yeah, absolutely. And we have a pattern here, right? We've got a nice cup with handle now. Granted, it is right there below its 200-day moving average line. That's not something that we usually like in an individual stock. But here again, if you're expecting some mean reversion to happen, this could be another way to play it. And look, these solar stocks, sometimes they'll trade leadership pretty quickly.
Yeah.
It's like, oh, this one's leading, now this one's leading. TAN kind of allows you to participate in the whole thing. And if you go to the weekly chart, it's not like this can't move. I mean, you look at that move that it had in 2020 to the beginning of 2021. That was a really phenomenal move, and I would argue that TAN was the better place to be in this case than many of the single stocks. It was really easy to kind of get out of phase, because they were trading leadership, whereas TAN just really
held the 10
kind of
week.
moved the whole way and was easy to hold, right? It just held that 10 moving average line. So as you mentioned, Enphase, Solar Edge, they can move 7% up or down in a day. TAN might be smoothing that a little bit, but look, this moves a lot itself too. So don't be thinking that you're in something that's going to be really tame. This can have some very big moves itself.
Right. And so sometimes, Justin, we talk about early entries within a handle, but to me, I think it would be great to see if it can get above that 200-day line. It's been an area where it's hit resistance in the past, and then if it can tighten up, or maybe it tightens up and then gets above the 200-day line. Either way, I think a combination of getting above the 200-day line and some tight action would really help me feel a little bit better about getting into this area.
I fall in your camp here, Ali, because yes, while you could argue that it did break above a downtrend in the handle and was actionable, it is when you see so many stocks, so many ETFs kind of in a similar position where they're coming up to lines of resistance, whether it's their 10-week moving average line, their 40-week line, their 200-day, their 50-day, the 21-day in some cases. When you see all of those hitting potential resistance areas, it would make me feel a little bit better to see it break through there. And the more we see more stocks and ETFs breaking through their resistance levels, I think that's going to give us more confidence. On the flip side, if we start seeing more of them reverse at those resistance levels, that's going to tell us something pretty important as well.
It will. And hey, it goes back to that shorting idea.
Right.
Maybe not necessarily with this, but just that concept of rallying up and turning tail at resistance. So we'll definitely keep that in mind. Okay, let's take a look at UNH, managed care stock that we've been keeping tabs on. Arguably actionable today, Justin.
Yeah, we did put it on leaderboard today. We've been putting on some small positions just to kind of increase our exposure a little bit in case this rally does work. We want to participate a little bit, but we're not getting in too heavy. We're waiting to kind of let the market tell us. As the market tells us, hey, your stuff is working, then you can get heavier into the market, but we don't want to overdo it. So we did add this. Look, it's crossing above that 500 level. It retook its 50-day moving average line. Arguably, it took out that level of resistance, that nice line that you drew. So there's some positive things going on here, and it's in the right area, right? This is an area where it's not alone. There's a lot of stocks in healthcare, managed care, biomed, biotech that we talked about. There's a lot in this area that is working. And UnitedHealth has a tendency to be in that long-term leader status. Now, I'm not sure that I would be using long-term leader rules for a lot of stocks right now, just
Yeah.
because we are still at that crossroads. But when you look at the monthly chart on this, this is something that has been able to really have a phenomenal move over a long period of time. It was actually on our long-term leaders list. It did get off that list, because with the political stuff that was going on with the election, the presidential election, it was running into some trouble. The relative strength wasn't keeping up. But you look at the stability, the earning stability is 8. The lower number, the better. This goes from 1 to 99. It's got a very strong EPS growth rate, an annual EPS growth rate of 17%. So the fact that it's been able to do that over the last 3 to 5 years, consistently have that high number, is very impressive. And you see that price action, that overall it's been able to move quite a ways. And this is one that could still have some room to go. So we'll see how it handles itself right here around 500. But it is something that we did add to the leaderboard today.
And this stock has been trending nicely higher, but it's built a lot of bases along the way, finding support not just at its 10-week line, like some higher octane solar names or others like to find support at their 10-week line along their move. This is finding support at the 40-week line along the move. So I think buying it where it is now, getting above the 10-week line, still only less than 6% above the 40-week line, versus waiting for it to get to new high ground. Because I think maybe some people who are newer to pattern recognition and buying stocks in the Cancelam style are saying, well, wait, how is this a buy point? Shouldn't you be waiting for it to cross that green dotted line? This is where that art and science kind of comes into play. Pattern recognition isn't always going to pick up the buy points that we can spot with our trained eyes. And then you also have to take into consideration the personality of the stock. And where it is in relation to those moving averages.
Those are all such great points, Allie. I mean, the personality is really kind of on display here. It gets support at the 40-week line. That's what it does. And once it breaks out, it doesn't move up that much before it corrects again. So you're absolutely right. Getting in on this, on the bounce, on the pullbacks, and that's the way we tend to treat a lot of the long-term leaders. So because it kind of falls in that category, I think there's a lot of reasons to kind of go for the early entry on this as opposed to waiting for the breakout. So I couldn't agree with you more.
All right, let's also take a look at Merck, MRK. This stock has been on quite a run here lately, Justin. So many up days in a row, including today, up 1.4%. Last week, a huge move for the stock, up 10%. It has an RS line blue dot here. On the weekly chart, it is showing a pattern, a flat base. We're not quite seeing that pattern on the daily chart yet. But so if it is vying for a breakout, Justin, that's great. But once again, you have to put it into context of where has the stock been lately? And it's been moving up a lot. So chances are it needs time to pause.
Yeah, that's exactly the reason why I brought this one up. It's again, I like the fact that it took all of those weeks to do that damage, and it's recovering a lot of that damage last week. In a single week, it recovered a lot of that damage. That being said, it would be nice for this to pause, and that's true actually of a lot of the stocks right now in this area. We're kind of seeing a similar pattern happen across, whether it's Eli Lilly, Bristol Myers, GSK. There's a lot that kind of have a similar look where they've come up so strong, you almost want them to pause a little bit, take a little bit of a break, and could provide new entries. Because the last thing you want to do is try and chase something as it's moving up really strong, because then when that pause or that pullback happens, you're kind of feeling like you're left holding the bag, and it can be much more difficult to figure out how to position yourself after that, because you don't have progress, so you can't add to it. You don't, you haven't. It just makes things difficult, and it's also in a normal pullback. You start questioning, okay, how much room can I give this? Because if you buy extended, then you're like, okay, if it comes down 7 to 8%, if I had bought properly, maybe I would have been okay. So this is very V-shaped, but again, on the positive side, We had some nice volume coming in as it made that move up, and it recovered a lot of ground very quickly. But it was a lot of ground to make up in a single week. So some pause on a number of these stocks, I think, would be good. And if we see that in the indexes too, before it maybe tries to take out some of those resistance levels, that might be nice too. So
It
a
would.
lot of things to look forward to, a lot of analysis. I think we've set today the questions that you can ask yourself. So as the market is going day by day, you kind of know what to look for.
Right. And one word of caution before we go, though, is after the last follow through day, we were saying how constructive it was to see a pause.
Yeah.
And then it all.
I was in that camp.
Yeah, well, it was. It was.
Yeah.
And but it also made it easy to see that, okay, this is breaking our expectations here.
Yeah.
So.
Well, and Allie, one of the things that you and I kept on talking about on this video was as it was doing that sideways action, it was really setting up some levels. It was either going to break to the upside or to the downside. Again, that's what happens. And so we got our answer, and it was very clearly to the downside as it broke below 12,000. So if we do go sideways, that's another thing for you to look for. That sideways action will kind of set up a level. If it can hold and then break above the highs, you're looking at potentially getting some traction. But if it can't hold, or you see a break below the lows or that range bound area, then it's a clear signal that you could be looking for trouble. And I mean, we have no idea how bad it can get and how quickly. So we saw that signal, and man, things really came down much stronger than I expected. But it still gave me the signal, hey, it's time to be more cautious, be more defensive, and get out. So you don't have to know what's going to happen exactly, but the warning signal tells you something is going to happen, and it's best to duck and cover.
All right, well, we'll see what tomorrow brings, and we'll be there with you for the first 90 minutes of the trading session on IBD Live, where we will be joined by David Ryan, protege of IBD founder Bill O'Neill, three-time U.S. investing champion with decades of hedge fund and mutual fund management experience. It's always great to have him on the Tuesday show, so we hope you join us, investors.com/IBD Live for all the details on that. Thanks for watching, everyone, and we'll see you right back here tomorrow.